The Minority Market. Episode 46. How to track and measure your performance. Most people in the stock market judge performance using only one metric, profit or loss. If money increases, they feel successful. If money decreases, they feel like failures. This mindset is shallow and dangerous. The minority understands that real performance is not measured by random short-term outcomes. It is measured by behavior, consistency, discipline, and long-term improvement. Tracking and measuring performance correctly is what transforms market participation from emotional gambling into professional execution. Tracking performance is not about proving that you are smart. It is about creating awareness. Awareness of strengths. Awareness of weaknesses. Awareness of repeated mistakes. Without measurement, improvement becomes guesswork. You cannot improve what you do not observe. Let us start with the most important principle. Separate outcome from execution quality. A profitable trade does not automatically mean it was a good decision. A losing trade does not automatically mean it was a bad decision. The minority evaluates performance based on rule following, risk control, and emotional discipline. Money is a result. Process is the foundation. The first layer of tracking is behavioral tracking. Did you follow your entry rules? Did you respect position sizing? Did you exit according to plan? Did you avoid impulsive actions? These questions reveal whether you are operating as a disciplined participant or reacting emotionally. Over time, behavioral consistency matters more than short-term profit numbers. The second layer is statistical tracking. This includes win rate, average profit, average loss, risk-reward ratio, drawdowns, and expectancy. These numbers show how your system behaves over multiple trades. The minority looks at data across large sample sizes, not individual outcomes. Patterns emerge only when enough data is collected. Another critical metric is consistency. How stable are your results over time? Are you making random gains followed by large losses? Or are you building steady progress? Consistency reflects discipline. Volatility in results often reflects emotional decision-making or poor risk control. Tracking also helps identify leaks in your system. A leak is a repeated mistake that quietly drains performance. Examples include exiting winners too early, holding losers too long, overtrading during boredom, or increasing risk after wins. These behaviors may not look dramatic individually, but over time, they destroy expectancy. The minority finds these leaks and seals them. One of the most powerful tools for tracking performance is journaling. Not emotional venting, not random notes, but structured recording. Write down why you entered, what conditions existed, how you felt emotionally, and why you exited. Over weeks and months, this journal becomes a mirror. It reflects your habits, discipline level, and emotional patterns. Let us talk about emotional metrics. How stressed were you during trades? How calm were you during drawdowns? How disciplined were you after wins? Emotional stability is a performance metric. When stress reduces and calm execution increases, your system is improving even if profits fluctuate temporarily. Another important aspect is time efficiency. How much time do you spend analyzing, watching screens, and reacting to noise? High time investment with poor results often indicates inefficient behavior. The minority looks for ways to improve efficiency, fewer decisions, better filtering, clearer routines. Performance measurement should also include review of mistakes. Not with self-criticism, but with curiosity. What caused this mistake? Was it emotional? Was it structural? Was it due to unclear rules? Treat mistakes as feedback instead of failure. This mindset accelerates learning. The minority also understands the danger of over-optimization. Constantly tweaking systems to maximize short-term performance often creates fragility. Instead, they focus on robustness, systems that perform reasonably well across different market conditions. Stability beats perfection. Let us introduce a simple performance review framework. Weekly review. Monthly review. Quarterly review. Weekly reviews focus on behavior and discipline. Monthly reviews focus on statistics and system quality. Quarterly reviews focus on strategic adjustments and long-term direction. This layered approach creates structured improvement. Another important habit is visualizing performance trends. Instead of focusing on individual wins or losses, observe overall progress. Are mistakes reducing? Is emotional discipline improving? Is drawdown control improving? These trends reflect real growth. The minority also avoids comparison with others. Social media profits, screenshots, and stories create unrealistic expectations. Comparing yourself to others destroys focus. The only meaningful comparison is between your past self and your present behavior. Progress is personal. Let us talk about accountability. Tracking performance creates responsibility. When everything is written down, excuses disappear. You cannot blame the market when your own behavior is visible. Accountability builds maturity and professionalism. Another critical point is protecting confidence. Measurement should not become self-punishment. It should become a learning tool. When used correctly, tracking builds confidence because you see improvement over time. Confidence rooted in data is stronger than confidence rooted in emotion. As capital grows, performance tracking becomes even more important. Larger amounts increase emotional pressure. Without measurement and structure, this pressure leads to mistakes. The minority prepares for growth by building strong tracking habits early. Remember this clearly. The market does not reward hope. It rewards preparation. Tracking performance is preparation. Measurement creates clarity. Clarity creates control. Control creates consistency. As you complete Phase 4 of the minority market journey, understand that you now possess the foundation of system thinking. You have learned about rules, discipline, process, and measurement. This combination is powerful. It moves you away from random participation and towards structured execution. From here onward, we will go deeper into behavioral mastery. But this phase is critical. Without tracking and measurement, growth becomes blind. With tracking and reflection, improvement becomes systematic. If you want to become part of the minority, stop guessing. Start measuring. Observe yourself honestly. Improve deliberately. Let data guide your evolution instead of emotion. Your future results are hidden inside your daily habits. Track them. Refine them. Strengthen them. This is how consistency is built, quietly, steadily, and powerfully.